In this session we're going to look at the taxable benefits on beneficial loans. Now, a beneficial loan is where an employer gives an employee or a relative of the employees an interest-free or a cheap loan, and this is as a result of their employment. Now, under these circumstances there may be a taxable benefit to the employee, but there wouldn't be a taxable benefit if the total loans to an employee did not exceed £10,000 at any time during the tax year, or if the loan is used by the employee to purchase equipment for use in his or her employer's business, or if the loan is used by the employee to pay for expenditure that's incurred wholly, exclusively and necessarily in the performance of the duties of the employment. So how do we calculate the benefit? Well, what we do is we take the loan outstanding and multiply it by what's called the official rate of interest. Now, this is given to you in the tax tables available to you in the assessment, and it's currently 3%. We would then deduct any interest that was actually paid by the employee in the tax year, and that would leave us with the taxable benefit from the loan. So let's have a look at an illustration. So an employee receives a loan of £20,000 from her employer, and interest was paid at a rate of 1% by the employee. So we're talking about a cheap loan. And finally we're told that the loan was outstanding throughout the tax year. So first of all we would take the amount of the loan that's outstanding and multiply it by the official rate of interest. So that's 20,000 multiplied by 3%, or £600. We would then calculate the interest that the employee paid on that loan, and deduct this amount. So that's £20,000 times 1%, or £200. So the taxable benefit of this beneficial loan to the employee is £400. Now, sometimes the loan is increased or repaid either in whole or partly during the tax year. Where this happens, the benefit is calculated using either what's called the precise method or the average method. Now, the precise method is where we calculate the interest on a daily basis over the tax year, and I think you'll appreciate that it's unlikely that they would ask you to do those calculations in an assessment. It's far more likely that they'd ask you to use the average method. So what you would do is you look at you take an average of the loan that was outstanding at the start of the tax year and at the end of the tax year, and then you apply the official rate of interest to the average. So let's have a look at a couple of illustrations. So with our first illustration, we've got an employee who at the start of the tax year owed their employer £12,000. At the end of the year the amount outstanding was £8,000. Now, first of all, I'd mention that the balance at the end of the year is less than that £10,000 that was mentioned towards the start of this session, but of course at the start of the year, 12,000 was owing, which is more than that £10,000, which means that there will be a beneficial loan benefit applying to this employee. So we would calculate the average loan that was outstanding over the year. To do that, we will add the balance at the start of the year to the balance at the end of the year and divide it by 2. So that gives us an average loan outstanding of £10,000. Then we can calculate the benefit, which is our average loan multiplied by the official rate of interest of 3%. So the taxable benefit in this illustration is £300. Let's now have a look at another illustration. Here we've got a loan outstanding at the start of the year of 100,000. Then at the end of the year it had been increased to 150,000. And the employee paid interest at a rate of 1.5% per annum. Now, if it is the case that you're not told exactly what the employee paid in respect of interest over the tax year, then what we can do is we can assume that it's going to be the interest we can calculate the interest based on the average loan that was outstanding over the year. So in this case, we would start by calculating the average loan outstanding over that year. So that's 100,000 plus 150,000 divided by 2. The average loan outstanding during the year was 125,000. On that we can calculate the average loan multiplied by the official rate of interest, which works out at £3,750, and then deduct the interest that would have been paid on that loan. So that's the average loan outstanding of 125,000 multiplied by the interest rate that's payable of 1.5%, or £1,875. That leaves us with a taxable benefit for the year from this beneficial loan of £1,875. Finally, if it's the case that the employer makes a loan to an employee and then writes off that loan, so they're no longer going to seek recovery of the loan, then the amount that's written off is going to be a taxable benefit for the employee. And that's the case even where the loan is for less than £10,000.